Hey guys, Natasha here, realtor in Charleston. I'm so excited to bring to you an amazing loan officer today. I'm getting so many questions from clients about the lending process. So, who better than to get your answers directly from than Gabby? She is awesome. She's here locally in Charleston with Atlantic Coast Mortgage. Welcome. Thank you for joining us.
Thank you for having me. I'm so excited to talk about lending, and there's so much to go over.
Yes, this is great. So I want to kick it off with a few questions that I frequently get so that
Mhm.
you can help people understand some of the ins and outs of the mortgage world because it definitely can be a beast. So the big question I get all the time is, do I have to put 20% down
Yeah,
on mortgage?
such a great question. So the short answer is no. You do not need to put 20% down, especially if you're buying a home that's not one of these big, beautiful, large jumbo mansions in Charleston. Just you're buying your first home. You can actually be eligible to put down only 3%, which is so much more affordable for our generation and for first time home buying. So the answer is no, you do not need to. Do not feel intimidated by the down payment. There's also some great down payment assistance programs that you could possibly qualify for. And there's just so many different loan options out there.
Okay, good. So, I mean, even if someone maybe saved the 20%, they don't necessarily have to put it down if they want to keep some cash in the bank.
Yes.
Okay.
And for closing costs, that's another thing that you need to worry about in the process. It's a different question, but it's good to have, if you have those additional funds, you can use it for many things. And yeah, down payment can be reserved just for the 3%. And then anything above it is, kind of goes into different markers and different loan programs.
Okay, good to know. Thank you. So, another great question is, what is PMI?
That is a great question. It's one that I often go through with all of my clients. So PMI, also known as MI, mortgage insurance, there's so many different terms for the same thing. So really it's anybody that is not putting 20% down on a home is obligated to have this thing called mortgage insurance. And really what it does is it's protecting the lender. It's a very selfish insurance and our investment in you. You're borrowing the money. And so you are liable to have it. Again, it does change what the payment looks like based on the down payment, on your credit score. And it can also be structured a few different ways. So depending on, those things that I mentioned, credit score and down payment, it could be paid monthly. It could be paid all up front. And if whenever you're speaking with your lender, make sure you're talking about those options with them.
Okay, good. So, it sounds like, we're already just two questions in, and it sounds like there are a lot of different options for people. So, important to maybe work with someone to help you get your ducks in a row.
Yes, absolutely.
Okay, I get this question all the time, and it's because there's so much new construction in Charleston, and a lot of them offer what seems to be these great incentives like we'll pay your closing costs, or we'll offer you this sort of deal if you use our in-house builders lender.
Right.
Um, are they the best option for people?
That's a great question as well. And I would say that more often than not, it is not the best option for a buyer. And the reason is because they often are not giving you sometimes their best rate up front. They are what we call cushioning those incentives into maybe an interest rate where they're displaying something really beautiful over here. Like we're giving you these closing cost incentives, but on this side, there could be additional fees that they're charging you. They could be charging you something called discount points. And that is basically charging you for a lower interest rate and you're unaware of it. So you really want to be very aware of whatever fees an inside builder is charging you and have that conversation with your lender and with your realtor because often they're experienced and they can highlight those things on an in-house lender's estimate and really show them, look, this is where they're charging you these fees. And, if you go through it from top to bottom, oftentimes the closing cost incentives that they're being given are really less than the fees that they're being charged. So it's really important to make sure that you're getting the best deal and you're also getting the best lender that's going to have really your best intention at heart. So it's important to, again, have those conversations and just to be aware of what, option you're actually being given by the lender.
Okay, that's great. Thank you so much.
Mm-hmm.
I try to help my clients understand that after they go under contract to purchase a property, they really need to not open a Haverty's credit card to buy all this furniture or go crazy at GDC or Pottery Barn. So why can't we do these things while we're under contract?
Oh my goodness, story of my life. It's so important to not open up any additional new credit or debt, as we call it in the lending world, when you're in the mortgage process, because we are monitoring your credit. So we do credit checks, not pulls, but we're monitoring it throughout the entire process. So if we see, ABC Furniture pop up, we're going to ask you, what were you doing at ABC Furniture? And we're going to have to include that new credit balance. So if you go off and charge $5,000 and that payment, maybe you're maybe you already have some debt that you're working with, right? And we really can't get any more debt in the file to make this loan work. And you have to remember, it's all about, what you're bringing in for your income and what you've got as your debt. So that additional debt could possibly be the straw that breaks the loan files back. So you want to be so careful that you're not starting any additional new credit or debt when you're in the process. But I promise you, the day after you close, you can go bananas if you want to.
Okay, good. But wait until you close. Wait until
Please wait until you close.
Good. Well, thank you. This was so helpful. I'm sure this is just the tip of the iceberg for people. So what is a good way for them to get in touch with you if they have further questions about the lending process or if they want to work with you in their home purchase?
Yeah, so I'm on Instagram. That's one of my easiest ways to reach out. So it's gabby's.loaningit. And you can also email me. My email is ghaymans@acmllc.com, or my phone number is 843-730-4242. Those are my 3 best ways to contact me.
Perfect. I love it. Thank you so much. This was great. And I look forward to you helping some of my clients.
Thank you so much. Have a great day.
All right. Bye. Thanks for watching, guys.
Bye.